bigger angle for this is kind of he's lining up what he wants to do in another term. So he's saying, look, America, if you reelect me again and we can get Democrats to keep control of the Senate, take control of the House, here are the agenda items that I'm going to be really pushing for. So in some ways, it's like a messaging platform for him, this budget, not as much as a feasible outline of what's going to happen in the coming months.
Welcome to Reporter's Notebook, where we talk to the Washington Examiner's top journalists about the stories breaking on their beats. I'm Jim Antle, and I'm joined today by economics reporter Zach Halaschak. Zach, President Biden has unveiled his new federal budget. One of his big talking points is his father saying, "Joey, show me your budget and I'll show you what you value."
Yep.
So we're seeing what he values. So what does the president value?
I mean, it was about what we could have expected. A lot of the things that are in the Biden budget are the same things he's been talking about on the campaign trail, same things he's been pushing for the past 3 years. A lot of aspects of Build Back Better that obviously didn't get passed. Some things they wanted included in the Inflation Reduction Act that didn't get included. But at the top line, the tax and spending level, he wants to increase taxes on corporations. Again, that's something he's been pushing for. So raising the corporate tax rate from 21% to 28%. Wants to raise taxes on the wealthy. Again, another talking point that he frequently speaks about is increasing taxes on the wealthy. So one proposal is a 25% minimum tax on billionaires, so the 0.001% of Americans. So that's kind of the big tax areas are the wealthy and corporations. And then on the spending side, it's a lot of some for the border, but also spending on healthcare, spending on education, expanding free community college, just building off of several other agenda items that he's really been pushing for over the past several years.
Now, you mentioned the campaign talking points. Given that Republicans control the House, however narrowly, and assuming they don't all resign, but right now they control the House, the likelihood of any of this passing is nil, right?
Snowball's chance in hell. There's no way any of this is going to pass, especially in an election year like this. So I think a bigger angle for this is kind of he's lining up what he wants to do in another term. So he's saying, look, America, if you reelect me again and we can get Democrats to keep control of the Senate, take control of the House, here are the agenda items that I'm going to be really pushing for. So in some ways, it's like a messaging platform for him, this budget, not as much as a feasible outline of what's going to happen in the coming months. Again, just an election year, even bipartisan stuff, like we're trying to get a tax package in the House and Senate right now, even that's having trouble, and that's bipartisan. So it just shows how much politics play into this as well.
So one of the real reasons that Biden tends to get low marks on his handling of the economy is inflation. So what is the latest news with inflation?
Yeah, that's right. We had 2 inflation reports out this week, the Consumer Price Index, which is probably the most watched gauge of inflation, and the Producer Price Index, which tracks prices that producers pay for goods and services. So it's kind of 2 different metrics, but they both kind of show the same thing, where price growth is heading. Both of them came in hotter than expected. So economists had expected the CPI to be, about even from what it was the month before. And then on the PPI, they expected it to pop a little bit. So what happened is on the CPI, it went from 3.1% annual rate to 3.2%. So it grew 3.2% from February of last year. And then the PPI, it increased all the way up to 1.6%, which was quite a bit more than was expected. And so it's not good news. Anytime you see inflation increasing, no matter how small, it's going the opposite direction that the Federal Reserve wants it to go. It's going up rather than down, which means the Fed is going to have to hold rates higher for longer, which isn't good for things like mortgage rates. People want to buy houses. That means that mortgage rates are going to be higher for longer. So it's really a headache for not only the Fed, President Biden, who's trying to win re-election and shore up his support for the economy, but also for consumers and just their paychecks and their wallets. So.
And a lot of people were hoping that previous signs of cooling inflation meant that fewer interest rate hikes and maybe some coming interest rate cuts.
Yeah, I mean, just looked 3 months ago, back in December, investors were largely betting that the first interest rate cut would actually come in March, this month. And we're so far from that now. It's looking like, based on the markets, kind of the implied odds there, it's looking like the first rate cut's going to come sometime in June, maybe July. And there's a pretty decent chance that it doesn't even come until September. It's really, again, that's a moving target here, and it just depends each month on how these inflation reports come in, and they've been coming in pretty consistently a little hotter than expected. So as soon as we start seeing that momentum of inflation going down to the 2% level the Fed wants, it's going to look like rates are going to be higher for longer, which, in the long term is not what we want to see. So stay tuned. Yeah.
Not just shrinkflation anymore.
Nope.
Thank you, Zach.
Yep.
You can read Zach and the rest of our policy team's coverage at WashingtonExaminer.com.